let's look at the numbers of Nazara Tech, and it was a bit of a steady show, a bit of a mixed show, if I can call it that, because the revenue was up around 9%, but the margins have come off a bit. The margins stood at 12.9% versus 13.4%. The gaming revenue has done all right. It's esports, which has been a bit slower, and ad tech revenue, that's fallen by almost 15% on a year-on-year basis. Let's try and discuss that more with Nitish Mittersain. He's the founder and CEO at Nazara Technologies, joining us on the show. Nitish, hi. Thank you so much for making time and speaking with us. Let's start with the margin itself. Do you think there was a bit of a seasonality and a bit of a one-off there? And what's the trend likely to be for the entire year in terms of margins?
Hi. Yeah, like we mentioned, the esports business, some of the revenues got deferred into Q2. And also we did some marketing spends towards our gaming accessories business. So that's going to reflect in Q2 and Q3. So I think overall we should see, healthy margins for the entire year. Just to clarify, revenues are up 14% and not 9%, which is being shown currently.
There's a bit of a change there with respect to the consolidated earnings, but you talked about how the sport revenue has actually got delayed a bit. So does that mean in Q2 we'll see some bunched up numbers?
Yeah, I think you should see, especially in our esports business, a good jump in our Q2 revenue number vis-a-vis the Q1 number.
Fair enough, but what's the other vertical doing like? Because there have been a lot of headwinds with respect to e-gaming, etc. as well, regulatory side of things. But in terms of the performance, how's the gaming revenue shaping up?
Our gaming business has done pretty well in this current quarter. We've seen, a healthy growth in our overall EBITDA. We've seen 41% growth in EBITDA year on year. We've seen 23% growth in revenues year on year. So the business is doing quite well.
Sorry, you just talked about some higher marketing spends that you took in the quarter and that impacted the margins. So what would be the run rate in terms of the marketing spends, ad spends to revenue going forward?
Look, the way we look at it, right, we like to see for every dollar or rupee that we spend, how much revenue are we going to make? And we have our own internal thresholds. Provided that we are meeting those thresholds, we are happy to increase spends at any point of time. But it's always important for us to maintain those guardrails. So it will depend on quarter to quarter. It's pretty dynamic numbers. So I can't share specific numbers or guidance. But I think overall, you will see a trajectory of growth on our consolidated numbers in the upcoming quarters.
The other thing that analysts were talking about, and they were quite excited, was the first ever televised BGMI tournament. Talk to me about what kind of media revenues are you expecting to garner from this broadcast TV plus OTT model?
Yeah, we did the BGMS series season 1 last year. And now the season 2 goes live in Q2. Which is actually 4th of August, it starts. We have a deal with Star Sports for streaming it on TV, and on OTT we are working with Router. We don't break out specific IP revenues, but we think these revenues should be healthy compared to our previous year, and the overall traction the viewership should be much higher, and it will add to our Q2 esports revenue for sure.
The other things that you're watching out for, because you've been doing steadily some acquisitions as well, is that going to be the strategy going forward as well? Anything on the anvil? And with respect to the regulatory challenges, where do the things stand as of now?
Sure. So Nazara has a strong M&A pipeline. We have a full M&A team that works very actively in looking for opportunities across the segments we operate in. We are currently in talks with many gaming or game developers and game development studios, where we can acquire well-known gaming IP and build it up, in India and globally. So I think those are areas we're very focused on, and you will surely look at, M&A activity going forward as well. In terms of the regulatory turbulence in the skill-based online money gaming space, I think we're still awaiting further clarity. 2nd of August, there's another meeting that should provide that. Either ways, Nazara's exposure to that segment of the business is very limited, under 5% of revenue and under 1% of EBITDA contribution in Q1. So it will not impact us materially. But depending on how the dust settles in this particular segment, it may throw up opportunities for us, which we will look very closely.
About how the M&A pipeline continues to be very robust. Any watches that you have set aside for this? Any particular vertical, any particular geography that you have in mind where you would be looking at expanding your presence?
Sure. So Nazara has a healthy cash on its balance sheet. In addition to that, we've also sought shareholder approval for a fundraise of up to INR 750 crores. So depending on the transactions, we may raise additional capital to fund it. In terms of geographies, I think India and US are two focus markets for us. In terms of categories, our primary category is to invest in game developers who have built some strong franchises and strong IPs in the gaming world, which we believe we can build up. After acquiring, we can scale up these IPs and monetize them in a variety of manner. So those are the areas we are focusing on.
Morning. I wanted to also get in your outlook then for Kiddopia in particular. You did have the margins which have increased, but there was a technical issue, the attribution partner temporarily disrupting marketing campaigns. Is that all now sorted? And what's the outlook on growth for Kiddopia?
Yeah, so if you see Kiddopia, right, after a long plateau, actually Q3 and Q4 of FY23 had seen, growth come again. And we were expecting that to continue, but in Q1 of FY24, we got hit by a technical issue that kind of restrained the amount of money we could spend on marketing. That issue has been resolved in early June. So I think Q2 onwards, you should see the growth resume. And in the entire year, we expect margins to be in the 22-23% range. Q1, the margins are a bit higher because of lower marketing spends and also starting of some additional revenue monetization opportunities.
Okay, fair enough. And Nitish, highlight for us as well your long-term plans, because you're looking at the gaming's accessories business, Wings. That's likely to expand as well. Can you share a little bit more details? What's lined up?
Yes, that business has grown very well for us because we are able to reach out to our larger gaming community with some exciting products of Wings. We've recently also brought in Shubman Gill as a brand ambassador, and we have big plans for the festive season coming up in Q2 and Q3. So we expect again this year the gaming accessories business of ours to grow robustly. And looking forward to Q2 and Q3 for seeing some strong numbers from them.
Nitish, on that note, we let you go. Appreciate you joining us in the show. So that's the latest coming in from Nazara Tech. The gaming revenue is expected to remain quite strong. Esports, there is some bunching up that you can expect in Q2, and ad spends is something that they'll continue to see basis the return they get per dollar spent.